Welcome back, everyone. This is our oil market review for the 2nd of September. Enjoy the report. The oil market is still trying to digest the outcome of the OPEC meeting that took place yesterday, the 1st of September. Even though WTI's price action had not been significant during the past days, our aim through this report is to get a brief yet informative review of the most relevant fundamentals surrounding the oil market and enable traders to make firm and accurate decisions. At the end, we will be closing with WTI's technical analysis, in which we will point out important levels and trend lines, once again aiming at supporting traders with valuable trading insights. Starting first with the most significant event in the previous days, which was the OPEC meeting. We must know that going into the meeting, many analysts felt confident the OPEC Plus group would increase supply and allow for more barrels to be added to the global market. Even though this was the actual decision of the group, the increase in barrels may have disappointed the market, in our opinion, due to higher expectations. According to OPEC's official statement, the decision is to adjust upward the monthly overall production by 0.4 million barrels per day for the month of October 2021. WTI initially dropped by approximately $1.5 in the first hours of the meeting, but in the following hours regained most of the ground lost, stabilizing higher. With the decision to stick to gradual oil output increases, OPEC remains dedicated to keeping a balance between supply and demand for the time being. However, the dominant oil group also revised its demand outlook for 2022 upwards, which seems to imply that supply increases could be subject to change in the near future. For the year 2022, the OPEC Plus outlook sees demand grow by 5.95 million barrels per day after a record drop of about 9 million barrels per day in 2020 due to the pandemic. However, demand only rose by some 3 million barrels per day in the first half of 2021. Of course, a reference to the threat posed by the virus globally was made by the group, which tends to keep the oil market in a vulnerable position. It could be challenging to predict oil demand in the following months due to the pandemic circumstances. Thus, oil traders may be expecting further confirmation of these forecasts before making decisions. Yet for the time being, some increase in demand is evident. At the same time, oil prices may be getting some support from the weekly oil market readings released in the previous days. During the past Friday, the Baker Hughes oil rig count figure indicated active oil rigs in the US rose to 410, a sign that oil demand in the US is currently on the rise. On Tuesday, the API weekly crude oil stockpiles showed a considerable drawdown of minus 4 million barrels. On Wednesday, the EIA weekly crude oil stocks figure also showed a large drawdown of minus 7.17 million barrels, which was more than twice the figure expected. All the data pre-mentioned tends to add upward momentum for oil prices, which could be counterbalancing the OPEC meeting decision. Finally, in the past days, the oil market was negatively impacted by Hurricane Ida that passed through the Gulf of Mexico, causing a disruption for oil production. Oil companies with sites in the Gulf were forced to shut down production due to the storm, and according to some sources, restarting platforms could be challenging right now. Moving now to our technical analysis, please note this is crude oil's 4-hour chart. Crude oil continued to reach for the R1 69.15 resistance in the most recent sessions. In the past days, the price action was unable to breach above the R1, proving traders tend to keep it in mind for a possible price reversal indicator. Yet, in case this level is breached, then the way could be made for the R2 70.25 level to be approached. Also at the top, we continue to note the R3 71.55 level as a more long-term target for the bulls. However, yesterday the S1 67.10 level was also tested after the OPEC meeting decision, but was not breached. The range between the R1 69.15 resistance and the S1 67.10 level continues to be a battleground for the bulls and bears at the moment, as we tend to consider these levels break or make barriers. Other levels we have noted for a possible selling scenario are the S2 66.15 level and lower the S3 65 line. The RSI indicator at the moment is running across the 50 level, implying a rather indecisive sentiment for WTI. That's the end of this report. We hope you enjoyed it as well as found it useful. If you like this video, please feel free to share and subscribe. Also, as an effort to further support traders with valuable information, we are now carrying out weekly webinars on trending subjects, and all our subscribers are welcome to participate. Thank you very much for your time. From everyone here at IronFX, wishes for solid trading.